Hi, everyone. Welcome to the latest Carson's Take 5 with Ryan and Sonu. Sonu, this week we're going to title it, How Much Do Geopolitics Matter for the Markets? Obviously, we're focusing on the terrible news that happened over the weekend with President Trump. Thank goodness, though, that nothing truly tragic took place. But I guess the question that we've had a lot is, how in the world can the stock market still be up, on Monday, Tuesday, after that terrible event took place over the weekend? How's that even possible?
I think markets try to focus on what they can price.
Mm-hmm.
And, with respect to the market rally on Monday and Tuesday of this week, it was the markets are up, most stocks are up, I should say, for the same reason they were up on Thursday and Friday, which was we got a very positive inflation report. Inflation was much lower than expected.
Mm-hmm.
And because of that, markets are pricing in more interest rate cuts from the Federal Reserve. Right.
Mm-hmm.
And that's something markets can grapple with, markets can handle, markets can price, right? Whereas geopolitical events, usually it comes out of nowhere a lot of times. More often than not, it comes out of nowhere. It's hard to price those kind of events.
Exactly. Right? And we've shared this before, but we've taken a look at 40 major geopolitical events going back to, World War II in the 40s. And 3 months later, S&P is actually up on average, not by a lot, but it's still up on average. These are some terrible, terrible events in our country's history. The other way to look at it, though, Sonu, is there's been some really bad events that have taken place. If the economy is strong, if you avoid a recession, let's be honest, World War II, 9/11, some of these big events likely led to recessions. Well, we know stocks don't do well in recessions. But one of the more recent ones, obviously, October 7th last year, Hamas attacks Israel. 6 months later, S&P up 20%. I mean, that terrible, terrible event took place, but S&P is still higher by a good deal because, again, if the economy is strong, this is no easy way to put this, won't sugarcoat it too much. The stock market doesn't care about our feelings. It doesn't care about a lot of things. It cares about earnings. It cares about the Fed. It cares about inflation. And if those things are still strong, we're not ignoring these geopolitical events that are taking place because they matter. But when it comes to investing, they don't matter quite as much, I think, as probably a lot of us think that they do or they should. We've got about 3 minutes to go, Sonu. What else you want to add here?
No, I think, this is, unfortunately, we've seen this in our own country, right? I mean, in 81, I believe, there's an assassination attempt on President Reagan. In the mid 70s, you had two assassination attempts in the same month on President Ford, right? And markets rallied after that. I mean, which is not to say these things don't matter. Absolutely, they matter. But as far as markets are concerned, markets try to, it comes out of the blue. Markets don't price it. And the hope, I think it is a hope that it doesn't happen again. And markets move to look to earnings, interest rates, all the other stuff we usually look at.
Well said. When JFK was tragically assassinated in November of 1963, your head hit the pillow. You probably felt a certain way back then with that terrible, terrible day in our country's history. Like the very next day, stock market was up 3 or 4%, and then it went straight up in one of the least volatile years we've ever seen. Look at history, 1964, one of the least volatile years ever in our country's history, and up well over 20% a year later. So we've covered those. I mean, we've covered that, I think, pretty well as we hit about the halfway point here. I do want to point out, the makeup of Congress, right? We talked before about who's in the White House matters, Sonu, but the makeup of Congress, gridlock is probably a better word. Gridlock can be a good thing. The last 12 times we've had a split Congress, the S&P's been higher. This year, S&P's having a incredible year. We've talked about it a lot. We have gridlock again, probably lucky number 13. When all is said and done in November, we still expect some pretty significant gridlock as it pertains to Washington. Why is gridlock good? What does that mean? Because the stock market clearly likes it.
Because there's no big shift in policy one way or the other. Like I said, it's about what markets can price in, and markets can price in policy. And if there's no big change, and if there's a big shift in policy one way or the other, there's more spending, there's more tax cuts, no tax, markets can price all that. But usually it's about uncertainty. It's like, okay, if there's a clean sweep one way or the other, it's all red or all blue, there's going to be big shifts in policy. And it's like, okay, how much of a shift is that? That gets harder to price. Whereas if it's gridlock, you can be fairly sure, things are not going to change. So stay at status quo. That's good for markets.
No, well said. I mean, we've hit about the end of the road here on this one. I mean, it is it's no easy conversation for a lot of the things that we're seeing that are taking place. But again, the bottom line for investors, right? We talked last week about our mid-year outlook. We said, listen, The economy is still strong. The consumer is still strong. Earnings likely surprise to the upside. We talked about kind of the idea that there's some Fed rate cuts coming, some other parts of the market, not just tech and communications, other parts, financials, industrial, small cap, mid cap, all could do well. In the last week, we've seen some very, very big moves out of some of those areas. So some of those things are taking place. So for investors, it's been a good year, been a great year. We think it's going to continue to be a pretty good year. So with all of that, everyone, thanks for being here at the latest Carson Take 5, talking about geopolitics. We'll see everyone next week. Thank you.